Thank you very much. Thank you very much for this interesting presentation. And on that note, let me invite Mr. Chuma Ajene. Thank you very much, representing Dr. Herbert Wigwe. We've been discussing a whole lot around all this, and of course, given that Access Bank is actually at the forefront of this, it will be interesting to also get your perspective on this whole initiative. Thank you and welcome.
Thank you very much, and good afternoon to everyone. I would like to acknowledge my co-panelists, Dr. Fofak from AfriAxim and Dr. Nevin from PwC. I think this is obviously a very important topic, at this time, especially in the environment coming out of COVID, and the focus on, ensuring that Africa and the countries within Africa have the right economic policies to support growth and development. And this is not just about, temporary fiscal spending or monetary policies. This is really building the appropriate foundation for long-term growth in Africa. Let me start by also apologizing that Herbert could not join this forum for reasons that, for an alternative appointment that could not be rescheduled. So again, his sincere apologies. I will cover building upon what has been said, or some of what has been said already, but particularly focusing from a practitioner point of view, the implications of AfCFTA for the Nigerian banking sector and the financial services industry at large. So I'll put up a short presentation, which we've prepared here at Access Bank, that speaks to this particular topic. I would like to start by, reminding us, of the objectives of AfCFTA in the first place. And as I go through each of these, I will highlight what it means for Access Bank and what it means for the financial services industry at large. So there are a few key objectives that the free trade agreement has set out to achieve. The first being to expand intra-Africa trade. I like what was shared earlier by Dr. Nevin around, at the end of the day, for Africa to really grow, for Africa to really industrialize, for Africa to really move away from being primarily extractive industries focused to more productive, to move sort of at the higher point in the value chain, to move to the level where, China is, and over time, the more advanced industrialized economies like, the EU as a whole and the Americas. It's important that we start where we have the most competitive advantage, which is within ourselves. Many African countries sit within very contiguous borders. There is a young and growing population across Africa with a high demand for goods and services, many of which originate fundamentally from the African soil, and also fundamentally originate from the African mines in terms of when we talk about, exporting brains across Africa. So it's important that really we start buying from ourselves what we fundamentally can offer ourselves. And I think this is one of the most important objectives of the free trade agreement that I see playing out over the next decade or two, which will be important for the growth and development of Africa. I won't talk too much. I won't spend too much time on the customs union because that's an evolving discussion. But the free movement of African people across Africa and the free movement of capital across Africa is very important for the financial services sector. And one of the emerging themes within the financial services industry has been, particularly within the fintech space, largely around payments. And as more people are able to move between, Ghana all the way to Kenya, in terms of people, in terms of goods, in terms of services, in terms of financial capital and intellectual capital, that will only promote further activity in terms of payments across the continent. And that's an emerging theme that will promote financial sustainability across the banking sector, because that is particularly one of the huge areas of fee income generation. We talked about competitiveness amongst member states. Ebenezer, I think it was you that mentioned Access Bank is buying a bank in South Africa. And I think as Nigerian banks in particular expand into the rest of Africa, access to higher quality talent, access to specialized talent within certain industries. I mean, the case that we always think about consistently is within the mining value chain, which is obviously an industry that has huge potential in Nigeria, but because of the historical reliance on oil and gas, has not necessarily been an area where Nigeria has developed a lot of core competencies or skill sets in terms of human capital within the country. So by having access to the South African markets or certain markets in Africa where mining is a bigger part of their economy, it will help us in attracting the right skills, with attracting the right partners that will eventually help develop the competitiveness of the Nigerian economy as a whole, especially as it looks to diversify beyond oil and gas into areas like gold mining and other areas within the extractive industry. So that competitiveness, again, dovetails quite well with the movement of people as well as financial capital. The AfTA is actually going to be quite interesting because it's the first step in a number of key steps that will see further integration, especially when it comes to regulatory systems across Africa. When we look at the European Union as a model today, obviously you have the ECB, which effectively provides a single layer of banking regulation across member countries. As we expand across Africa, we have to work with many, many different regulators with different approaches to the same set of issues. But we do hope that one of the outcomes over time of this free trade agreement would be greater coherence, greater communication, greater streamlining in terms of regulatory policies, and hopefully even one day, the creation of an African central bank that would make it easy for, an entity operating in Nigeria to lend, into DRC, to lend into Kenya, without necessarily having a separate banking license or a separate banking operation in those countries. That will obviously promote some of the things I've highlighted earlier around movement of capital. And finally, industrial development through diversification is not just important for Nigeria, it's important for every African economy. Because different African economies go through different cycles depending on their core exports. But as we work more collaboratively together, I think the fortunes of Africa will become more tied together. Countries will be able to support other countries who are going through sort of the downturns in their cycles and vice versa. So we see Africans working together as a key theme that will help promote industrial development across the continent, and that diversification is very important as Africa really emerges as a global player to reckon with in the coming years. We wanted to just highlight some of the key implications. Sorry, was that a question?
No, not a question. Please go on.
Okay. I would like to highlight some of the key. Let me put this on slideshow so it's easier to see. We would like to highlight some of the key implications as we see it for the Nigerian financial services, the Nigerian banking industry at its core. We expect, as Access Bank is already doing, to see more banks, particularly within the tier 1 space, continue to push into African markets especially those that are not necessarily correlated with the oil economy as a whole. I think one of the emerging global themes that we're all well aware of is a move away from fossil fuels. Many countries have put in place long-term policies that will see a movement from cars powered by fossil fuels. And this emerging theme around electric vehicles has made it very obvious that an over-reliance on oil or an over-reliance on fortunes determined by the prices of oil and gas is not the right way to go. So we expect to see more Nigerian banks looking to diversify their revenue streams, looking to diversify the volatility within their balance sheets, and really building scale, not just being present, as the case may currently be, but being scale players in the rest of Africa. At Access Bank, this is important to us as we think about our Africa strategy. We have identified specific markets whose performances are not significantly correlated with the performance of oil. And that's why you've seen us over the last 12 months or so, and you'll be seeing more of that going into the future, diversifying into markets like Kenya, diversifying into markets like South Africa, doubling down in terms of increasing our scale and presence in Zambia. And we'll be doing more of that in economies whose fortunes, as I mentioned, are not correlated with oil and gas, but are correlated with what we see as the future of the global economy, which will be more reliant on natural resources such as copper, natural resources such as cobalt, natural resources in line with natural gas, where we've just acquired a bank in Mozambique to boost our scale in that market, given the growth profile of the Mozambican economy will be driven by its natural gas exports. So I think we'll expect more Nigerian banks to rethink their Africa strategy to ensure that they are scale players in this market and have meaningful contribution from the rest of Africa in terms of their total earnings profile. We expect to see more investments outside core banking. I think last year, at least 3 banks in Nigeria announced the conversion of their core operating banking license model into more of a holding company approach. There was GT, there was Sterling Bank, and of course there was Access Bank. I think what that does for us is we've identified that the banking industry or the core elements of banking are increasingly becoming saturated. The threat of fintech is becoming more and more real. And as we grow across Africa, where in many of those markets, Kenya being actually the prime example, where fintechs play a very, very large role within the financial services space, we can already see what the future of banking in Nigeria would look like, having experienced or having adapted to thought leadership coming out of some of these other African markets. So what we're looking to do, and what some of our competitors are already looking to do, is to ensure we have a model that cuts across the financial services value chain, not just your bread and butter banking, taking deposits, lending to customers, but ensuring that we provide or we speak to our customers' needs across the various elements of what they need in terms of financial services as its core. And what I mean is payments, insurance, asset management, and all the other streams within the financial services industry that allows us to really deliver a holistic set of solutions to our client base. And you'll see more investment in that from us in Nigeria as well as Africa. Trade finance is going to be one of the biggest, if not the biggest, implication coming out of the free trade agreement for Nigerian banks. I think traditionally a lot of intra-Africa trade given it's very much at a nascent stage, has been done on open account. As we see volumes increase, as we see intra-Africa trade moving away from contiguous borders, so we're going to see ourselves moving away from trade largely dominated by transfer of goods and services between countries that share similar borders. So for example, the Republic of Benin and Nigeria, evidently there will be lots of trade. Kenya and Tanzania, for example. We're going to be seeing more goods and services moving from east to west, from north to south, Southern Africa. And what that creates is the need for an intermediary that can stand in place. Because ordinarily, many clients tend to understand themselves when you're dealing within short distances or within economies that are used to trading with each other on a continuous basis. But once you have a Southern African corporate, all of a sudden moving away, either due to competitive advantage or price or many other economic reasons, moving away from, say, importing something from South Africa to importing something from Egypt, and is less familiar with that supplier, there will be a need for banks to step in to provide LCs, to provide other type of guarantee structures within the trade finance context. And that's going to be a huge opportunity as trade opens up across Africa. And we'll see a lot of that intra-Africa trade moving from open accounts to utilizing some of the prolific and profitable trade finance products. The last implication we would like to highlight in this discussion is the emergence of new risk management peculiarities. Today, in a number of larger African countries, South Africa, Kenya, Nigeria, Ghana, etc., clearly there's an adoption of global standards, whether it's from an accounting point of view, IFRS, or from a regulatory point of view in terms of Basel. But the reality in some of the smaller African countries, there's still an adoption of local principles, local GAAP, local banking regulations that are not necessarily aligned to Basel. And we've seen some of that in some particular countries in French West Africa, for example. However, as Africa integrates, we expect that will actually promote the acceleration of adoption of global standards across the continent. This will make it easier for people to understand and trust what they see in other African countries. And I think that will obviously promote further trade. We also expect, as I mentioned earlier, for all the national regulators to start cooperating, start communicating a lot more, which will accelerate some of the adoption of those global standards and best-in-class policies. So again, we believe, in closing, that the free trade agreement is a fantastic opportunity for Africa. We expect to see, hopefully, fast adoption and fast. We hope to see some of those implications, especially the positive ones, play out quite fast in the next few years across the continent. Thank you for the opportunity to speak, and looking forward to the questions.
Thank you very much, Chuma, for that interesting presentation and for sharing with us Access Bank's African strategy. I also like to commend Access Bank's foresight, as well as those of other leading Nigerian banks in terms of their Pan-African drive, which has made it possible for them to be well positioned even at the very beginning of the implementation of this AfCFTA. So we congratulate you guys, and we wish you all the very best, in these great opportunities that abound.